Bitcoin is entering a do or die level. In today's video, we're going to take a look at what's occurred in some of the recent price action, where we're at right now, and what could happen next. So without further ado, let's get straight into it. So we had this mini range after bouncing from 86k. The range, we had a nice long in this area, which we can review, which came to fruition, pushed up into this area, and then at the time we were potentially looking for a reflipping of this level, and then the current level we're in now potentially being a major support level if we got down to it. So since then, a few interesting things have happened which have potentially changed the dynamics of the market and even how price is moving into the level or momentum. And one thing we want to be careful for here is a setup that, again, if you're a frequent viewer of the channel, you'll know we discussed a lot. Moving from range extreme, so deviation outside of the range highs. What this does, and you can see this for those of you who use Excel charts, what happens here is you create trapped long traders in this area, which then causes a squeeze lower, whether that's breakout traders. You also take the stops and the liquidity above the range highs. And then, of course, we moved just kind of front running this major key SNR level, which was our next real major resistance level. So as of the moment, the way we have kind of dropped down, we'll move down to the 4-hour time frame in a minute. We are moving down with a little bit of momentum, creating that deviation, hence why this level here is becoming somewhat a do or die level. So as I mentioned, we had a really nice long in this area. At the time, we had our relative equal highs overhead, which was a nice, again, liquidity target, and we broke above, and we of course had multiple take profits along the way at these highs, and then of course we got some in and around this region up here. So that was a nice long, and we had kind of created this nice base. So the assumption was, if we were to move into a discounted price range like such, and then we put the 618 level, that there would be a lot of confluence in this area. I believe there was potentially some naked point of controls in and around this region at the time, like the one here we got a small reaction from, but unfortunately it has not been enough so far. So the setup we were potentially looking for was the flipping of the range highs and this range high key SNR level, which was quite strong resistance within the range, which is quite normal to be fair with these sort of ranges. So we're potentially looking for the flipping to act as the launch pad to maybe push through this major level overhead. Instead, we kind of got this really aggressive move through the level with these candles. And of course, if you've watched the RSI tutorial I did, I really thank you everyone who watched it and gave positive feedback. Really appreciate it. We'll be doing some more trading tool tutorials in the near future. But on these sort of moves, and like with the RSI, what the RSI helps measure is momentum, and momentum in markets is everything. So of course trading is discretionary, and even though you have your trading variables, you still need to be the one to make the decision on whether them variables are actually valid in that moment. Hence why blind bidding any sort of actual trade, not necessarily spot trades, where you're actually just buying the asset. With these sort of moves, the momentum is really what you want to see. How is price moving into the level? Is it moving in on a weak momentum so that when buyers enter the market, you get that push away? And that is what we've kind of had here. So this helps you kind of avoid looking for poor entries. How is price moving into my level? So after really aggressive moves like this, I wouldn't really be blind bidding these sort of positions. But as of the moment, market structure is still, and even though what we've talked about previously about multiple time frame market structure and what might be an uptrend on the 4 hour is actually just a pullback on a higher time frame. So let's say we move to the weekly quickly here. The weekly now is not so clean. You can see that the bodies of the candles from this week and last week have closed again below the 2025 yearly open. So even though we had the nice long trade which we captured in the wick, price still has come back down and respected, just like all the previous wicks, away from that 2025 yearly open. And the concern now has to be if we lose the level that we are in right now. Of course, we have the 2026 yearly open, but what starts to form here is our lower low, our lower high, and then inevitably what potentially could come next is that lower low again. So that's why the level we are in is extremely crucial, because if we have our market structure almost like a curve, you have the weekly time frame, you drop down to the 4 hour time frame, we have higher high, higher low from this low, we have our higher high again, and now of course we are looking to put in that higher low. If we were to break through this level, even if we get down and bounce at the 2026 yearly open, which we very well might do, the concern then becomes this rejection away from this level, continuing the curve to the downside. So you have your bullish side of the curve, and then you get the shift, and then you get the bearish side of the curve down towards range lows. So again, as of the moment, this is very much a sit on your hands and wait type scenario, because even if we do get a push up away from here, you do have these little trouble zones here where price could potentially reject away from. So as of the moment, when it comes to longs, I would lean towards the more conservative side, and even with shorts. Sometimes the best thing to do is wait for the market to make its move first. And the beauty of the markets are they always offer entries to those patient. So that's what I would recommend at the moment. Also, another key factor here is the geopolitical unrest. We are not a politics channel, but it is important in relation to the markets with the tariffs, as we've seen towards the highs earlier on when the Trump tariffs came in on China. That was a bearish event, and now, of course, Trump's administration and Europe are clashing over Greenland and a few other issues. So, at any moment, markets could switch extremely bearish. So it's best in these sort of spots just to sit in your hands, because they do tend to be volatile environments, which means that even if you are positioned well, you can still get wicked out or flushed out. So that's all for today's Bitcoin market update video. I hope you found it insightful. I'm hoping to post another trading tools tutorial later on in the week, so make sure you look out for that. Please like and subscribe and comment below your thoughts on the market, and I'll see you guys in the next one.